Good morning, traders. It is March 8th, 8:29 a.m. Eastern Time. Welcome to another video with Digital Goats Academy. I'm your host, Antoine Farrar, and welcome to my weekly review. So yesterday pretty much was NFP, non-farm payroll. So the market was definitely extremely volatile, but it really wasn't trending. It was more so consolidating, but giving you somewhat great opportunities. If you trade it before 10:30 a.m., but after that, the market was just, well, even before that, the market was all over the place, but you still had small opportunities within like US 30. Well, when I'm saying opportunities, I'm basing it off of like US 30. So as you can see, I have US 30 on my screen today. Now, let's look at some of the things that we were discussing the past like couple of weeks. One thing that I do want to highlight is the dollar index. So the dollar index did drop extremely low, but we actually talked about this like towards the beginning of, or towards like the middle of February, that the dollar's overall bullish, but what we're looking for is corrections. So the dollar blew through this support structure. I thought it may have, respected this, but it blew through that. But again, these are areas that I was projecting. I said that I think the dollar could go as low as like 101. I don't think that we'll see 99 again, hopefully, which will pretty much trigger a recession if we get down that low. Now, these were one of the areas that I had annotated from like 2, 3 years ago. So you see the dollar rejected off of 103. I think the lowest it went was 103.4. So if you look at it, dollar went 103.4. Now, this was one of the first areas that I was looking at for the dollar to start rejecting and pushing up. What's crazy is that it coincides with US 30's reaction. I'll touch on that in a second, but you'll see what I'm talking about in a few. But if we just pull our Fibonacci tool and see what percentage that the market has closed at. So we actually have a close on the weekly time frame. Now you see we're at 618 of this entire move. So that's normally the golden zone, but we do have the possibility of the market coming down a little bit lower. So if we don't turn bullish and start like reversing from here, what the market will probably do is try to retest, push down a little bit, and then push up. But this is a good sign because a lot of analysts, a lot of experts are already predicating that, US 30 is bullish and that the dollar is still heavily inflated. So basically what a lot of analysts were saying on Bloomberg yesterday is that we're in correction territory. I know there's a lot of losses going on within companies because of indices such as like NVIDIA, Tesla, but look at where they are now in representation to where they were like a year or 2 years ago, because they're still up. You know what I'm saying? So when you look at the market, even with losses, you have to look at it as it's still up until proven otherwise. Even the dollar index, it's still up. There's nothing really telling us that we're reversed. Well, we're selling until we get down to these low points. Now, what is looking like is that the dollar is trying to come back to a previous level of resistance. A previous level of support, which is now resistance. Well, no, I said that correctly. A previous level of resistance, which would be now support, which is kind of highlighted with this blue area right here, which is kind of crazy because US 30 did something similar to this. Not saying that the dollar is going to react like that, but US 30 like stopped at a candle like this, started, pushing up to correct itself, and then it pushed down. This is the actual previous high. Like in this area, I know there's a lot going on. Let me actually see if I can turn off. Yeah, so in this area right here, these are previous highs that we should look for the market to return to. So if we're just looking at it, if we just start from the wick, make that red. That's a previous high right there. And that's a previous high right there. Now, these were all areas that I had annotated prior to this move to the downside. So if the market were to come all the way down here, it would make total sense. It wouldn't go out of the foundation that the market creates. But I don't know if we're ready to be here, if we're ready to come down here yet. To me, if we did come down here, we do have fears of a recession. We shouldn't see, in my opinion, we shouldn't see the market want to touch these areas again. Really, because we've already created support. So the next area that it should be looking for is a previous high to confirm that, yes, we are bullish. So this should be the pullback where the market starts to trickle up. It'll be slow with consolidation probably, and then we'll have our push up possibly. Now that looks more likely than it is not likely because of all these gaps we have. The market is setting us up to blow through. It's probably going to blow through this gap. You know what I'm saying? All these gaps up here. Now that it actually rejected it, the next time that it comes back up here with some manipulation, I'm trying to get that. So that's a gap too. And then there's like a circle gap that I drew down here. So when the market comes up here, it'll probably, like try to reject these levels to manipulate and then blow through. But anytime that it rejects, it's probably given an opportunity for the dollar index to be bought up. If you do trade the dollar index, I don't trade it. I just use it as a guide in correlation against other currency pairs. But the fact that you start seeing if you scale in, so what we want to do is get a better picture, because on the higher time frame, even though it's showing us the direction, you can get fooled by being like, this is the true direction, like with just this one candle. This is an imbalanced candle right here. So there's nothing that retested this candle to say that I'm still bearish. So if this market comes 100%, more than likely is going to push past it even higher. You see what I'm saying? What was I going to show? Oh, scaling in. So when you scale in, now I'm just going to the 1 minute so we can back out. And you can see that it's starting to be bullish on the smaller time frames. Remember, the smaller time frames are where the reversals happen. You won't see it on the higher time frame. That's why you have to scale in on a smaller time frame. But to me, this is good signs right here. So the fact that it's actually playing to those zones that we already had annotated and at the bottom of it. It rejected it with this wick rejection. So it showed us that we had the possibility to go down there, but we don't want to go down there yet. If the market was decided to drop lower to fill in with the candle, that would make sense. But let's see what it looks like on the higher time frame as we scale up. More annotations, All right, since this is the end of this trend currently, I'm thinking that what's going to happen is that the market is going to break up out of this pattern and then continue pushing up. We may have like a pullback back to like the structure of it. So let's see if you turn it to a line chart. I know I love going to a line chart. So probably when the market opens Sunday, it might gap up, which it will drive this market down to retest that and then continue pushing up. And that'll probably be like a new gap created, which is below this one, which what we've already seen is that the market will like blow past these gaps and not even return to it. This gap up here, the circle, this gap, it never came back to collect that property. You see how it's broken right there? Never came back. So that's why I had that annotated, because it will most likely come back to that area, giving us a potential buying position, which will in turn give us selling positions against currency pairs that's weaker than the dollar. You see what I'm saying? So this is good structure right here. I like seeing this. This shows me like the market is struggling to continue to the downside. So that's what I'm thinking. I'm thinking that the dollar index is going to start showing itself bullish. As you can see, we have a bull candle that closed on the 8-hour. Let's see the 4-hour. Same thing. We close bullish. Those are good signs. And on the hour, so let's make that over there. Yeah, I like that. I like that because one, it's in a zone that we waited for the dot. Well, we sort of waited, you know what I'm saying? I got my head beat upside against GU, still trying to sell it. Now that does bring me to GU, the fact that we are at this position with the dollar index. So again, GU, you see GBP USD, it closed bearish on the hour time frame. Let's see. Now, I expect these things to possibly gap into the direction that they're trying to go. But I do think overall now, with if the dollar index is turning around and we hit that 618, that sweet spot with GBP USD, and we're super. Remember, when I threw out that chart marking video, I'm gonna have to tag it in this video too. When I threw that out, I said that GU should be bullish, probably trying to head to this range high. It definitely headed to that range high. You know what I'm saying? Still maintaining that bullish momentum from the weekly time frame. Now, again, what we established was that it's been bearish for like 13, 14 weeks straight. So the fact that it's buying up, that makes sense to collect that equity. That makes perfect sense in order to correct itself, right? And we're close to the high. Now, we could continue to go high, which would be reflected by what the dollar index is doing. We have a level of imbalance down here, but I'm not sure if we're ready to, push that high. I think this is just a higher high in order to establish that, yes, I am a bearish trend. But once I come back up here to collect some equity, I'm gonna continue pushing down. This does look like inverted head and shoulder. Do y'all see that? Let me clean that up a little bit. If I drew this line. Now, here's the one thing about me that I've established, that I suck at head and shoulder, like trading them. For some reason, because I see it as like this perfect image, and it's normally not like that. So whenever I see what potentially may be a head and shoulder, I always go against it, because like I don't believe that that's a true head and shoulder for the foundation of it. Not to mention we have gaps down here. We have this big gap that the market never collected. So what I'm thinking is this is this false head and shoulder to get people believing that, yeah, we're buying up. And we've even had some positive news within like the United Kingdom, within like the Europe section of the world. There's been a lot of positive news. If you look at Euro USD, it's been positive. So there's been a lot of positive news, because basically the United States has been having negative news with all the tariffs that's been happening. So I see this as something to stabilize their economy, but nothing has been solid. I think this support is weak because of how high we're up. So I think this foundation will be broken. And I think that we're currently at that position now. 618 of this entire market. If you know about Fibonacci, you know that's the sweet zone. And if you just look at a line chart, it just makes sense. It just makes sense for, all right, we're at pretty much a previous low of this entire market, even if you just did it from a line chart. Let's see. Because I'm not capturing the wicks right now. 618. 618 still without the wicks. And I like capturing the wicks, so we put it 618 and started rejecting on the smaller time frame. So let's scale in, which we saw. Can't see it right there because obviously it's just wick rejection. That hasn't shown bearish candle. But if you go down to the hour, you can see the bearish signs already, right? You can see the bearish momentum. Turn it to a line chart, make it make sense. Yeah, that unless price was to continue to break, because you see there's really no structure besides this consolidation right here. So we annotate that as we normally do. Consolidation. This looks like a fake out breakout to the downside. Now, I don't have any more information to go off the market because it's obviously frozen. And I wanted to do this weekly review And I'm probably going to start doing it like that when the market is closed, especially during days as NFP. I can't really give a true analysis when the market is moving violently, because I mean, it's showing me different signs within those time periods, even though we've identified the overall trend, right? So if price breaks this or gaps below this, we know the direction that the market is trying to go. We just know that if it gaps, like, we'll have something to pay attention to when the market decides to either push through that or maybe create a higher position in order to bring the market down. But this looks like a breakout out of consolidation and then a push downward. So that's my expectations for like GU going into Sunday, which means that this could be a move where Sunday candle opens up and you can hold it potentially until Tuesday or Wednesday, whenever the market tries to return back, if it does, which it should. So if this stuff lines up with what I'm expecting the dollar to do, then yeah, you'll start seeing the weakness in the British pound against the United States dollar. And that'll probably start giving us our sign for our overall direction going into like Q2, Q3. So good signs so far. I mean, pretty chaotic. We kind of saw this ahead of time, but still good signs that we wanted to see. Really just don't get confused with your direction. And this is the importance of, that's why I emphasize, like, had I not been focusing on GU as well as US 30, I probably wouldn't acquire the losses that I had. But that's why I emphasize, like, staying with one currency pair and setting alerts. That way, when the market reveals itself, you can take opportunity. If you've already identified a direction, set your alert for potential pullbacks and stuff, and then casually gauge the market periodically as you're like waiting for your entry, if it's close to your entry, not like when it's farther away, right? Now, let me go into US 30, and then the last thing that I'm going to touch up on is Bitcoin, because I do believe that we're finally bullish again. So US 30, right? I'm glad I started on a line chart too. So let's just kind of play it back from where we were, like the beginning of January, to where we are now. Now, remember, the market got extremely bullish when the polls came in that Trump had won, right? So we started cooling off towards like December. December we cooled off. And then January we picked it back up. And then February, like, what is this? Mid-February, towards the beginning of February, we started pulling back. Now, the one thing I did identify was this area over here. And I was expecting that which could still happen. I was expecting that US 30 was going to continue to push down to these levels or break this level and then push up. What it's looking like, since it stopped here and it struggled to, like, as you can see, I have annotations down here. You can't really see that, but those are areas that the market rejected based off of wicks. Now, remember, it closed like this. So if the market starts pushing up on the weekly time frame, that's basically our direction for Sunday. You know what I'm saying? Like, that we're going up with some form of manipulation, but that was the lowest point. Oh, this was the lowest point, like, that the market went, and you could see it in reflection of a candlestick. So you see the lowest point, which was 42.1, which is crazy, man. I had it at 42.1 the whole time. So stuff like that, it's almost insulting how the market like disrespect you, and you've already predicated that move way early. So if we draw up to this here's one thing I want to establish first. All right, let's look at this overall trend from January to February, right? This high to low, and I'm gonna turn it to a line chart so y'all can make sense of it. All right, so what we were looking for is that, because this is consolidation, we're looking for price to pull back from the previous high of this candle. Now, you can't see it on the weekly time frame, so you would have to scale down. But look where the market came down to from this overall move, 88%, right? That's a good sign. You know what I'm saying? That's a good sign that it rejected. And the fact that it closed, one thing that I want to see is a close above 786. So I like seeing that if we're still remaining bullish, right? So what could potentially happen is that this is our sign that the market is going to push up. We could have an open and the market tries to push down here again in order to collect some equity and then push up, but we'll see. You know, I'm not trying to think too far into the future, but this is what I wanted to see right here. This is exactly what I wanted to see based off of this consolidation, because if we scale down, there's probably a previous high on a smaller time frame that we're not paying attention to. Yep. You see that reject? Look at that, man, dude. Okay. So what's crazy is that the dollar's at a point where it's at a candle two that has like a wick like this that are rejected. This is a previous high, and which was crazy. If you look, there's a gap there. You know what I'm saying? There's a gap there in the market. So that's something to pay attention to. But I think we cleared that gap because it pushed the same design in there like a wick. I want to say we cleared this gap in the market because this is an 8-hour time frame. Again, this is a custom time frame, so it might just show something that's a little bit different. Let's see what the 4-hour is showing us. Same thing, a wick. Yeah, definitely collected that. I was actually looking for the market to do, like when I saw this pattern, I was looking for it to pull back to like basically these levels, and it blew past all that. Yeah, so but even though that was more violent than I expected, the signs that I wanted to see have still shown up. So that still puts me in a better position to make a decision within the market. I do think that we're bullish from here. The fact that this market collected this on the same time frame, and I'm saying it because of the wick, not because of the 4-hour time frame we're on, but the way you're seeing these wicks, when you break it down to a smaller time frame, they are candles. You know what I'm saying? So when you break it down to the smallest time frame that they rejected on, I'm not sure if well, I'm almost confident that we're pushing up from here and the market's not going to return back to these levels. The one thing to be watchful for or mindful is that it potentially could, because the true lowest level is down here, the true previous high. But the fact that we pushed away from this with the wick, which means that I'm not necessarily trying to go down there, that's good territory that we're in for a buy zone. Not to mention experts have been saying, this is I believe, well, when they were saying it for the NASDAQ. But when I hear them say it for the NASDAQ, that means I'm hearing them say it for S&P as well as US 30, even the Euro and Asian stock market indexes, right? Well, not really, but you see, I'm grouping them together, right? So they're talking about S&P and the NASDAQ, then I have to look at US 30 like the same way, right? It's not going to be at the same market cycle, but I expect them to correlate the same way eventually. So the fact that US 30 started getting bullish, which is a good sign. Now, here's the thing that I did want to show. I got to find it on the right time frame. On the hour time frame. Remember, we've talked about this before. We've talked about the idea of like Harris Teeter, Walmart, Publix, whatever everybody has like for them out there in the world. I don't know all the grocery stores out there, but I think I did the common ones: Target, Walmart. I think Harris Teeter is nationwide, but y'all may have something else, right? So if we look at each of these points, where's my arrow at? So let's say this is Walmart, all right? All right, do I have the right thing? Walmart, all right. So this is Target. I don't know what else is out there, so I'm gonna just say Publix. I think everybody has a Publix, maybe. And then finally, here's Teeter, which I know it to be considered to be the better quality out of these other three. All right. I'm sure I spelled that wrong. Is it here? Yeah, it's here's Teeter, not Teether, right? Anyway, so here's Teeter. We're looking at this as food establishments, right? Grocery stores. What Walmart, Target, and Publix are doing, they're buying their produce at these prices, right? Figuratively speaking, or hypothetically speaking, right? They're buying their produce at these prices, right? So everybody across the board was kind of around 42,000, 42,000, right? So each time the market spiked, you know, that's that's where their sales came from. So when the market started decreasing, that's them needing to actually replenish. So Harris Teeter, instead of, because we make more money or however that works, right? Harris Teeter wants to buy it at a way lower price in order to basically have better sales than both Walmart, Target, and Publix, right? So Harris Teeter is going to wait until the market actually, or produce actually becomes really on discount. Not saying that these were bad buying prices, but you can see the consistency of it. And Harris Teeter is saying, hey, I want to buy it at a way better price, yo. So Harris Teeter waits till it gets to 42. Really, it went to what, 42.1? Yeah, 42.1, while everybody else is buying it at around like 42.4, 42.5, 42.6, right? So Harris Teeter buys in. Harris Teeter's the better quality. They're known for their customers buying, especially when they have like memberships and things like that, right? So as you know, more customers are, because they've bought their produce at a cheaper price, and as the equity keeps coming in from, their customers buying their products and stuff, it's gonna go past all these areas between Publix, Target, and Walmart until it's truly ready. Well, one, this puts it in a bullish state. You know what I'm saying? And the next area we'll have for like a retest will again be like a previous high or something like that once it's done correcting itself. But that's just kind of like a guideline. One of my trading mentors when I first started painted this picture for me, and it's always benefited when this pattern presents itself, because a lot of us will see this as what? Well, the market is bearish, so the market should continue. Theoretically, yeah, it should continue. But the fact that we had a major dip clearing this out, and we've seen this constant, where it's like you've bought at these positions, you're like, this is structure. And then the market dives deeper, right? It dives deeper to take you out and then pushes up. And you're like, oh my gosh, yo, expect that. But this was our confluence for, yeah, confidently, we're bullish now. You know what I'm saying? This was our correction territory, as the analysts were saying. And this is a pattern that should start pushing the market back up. So unless it gaps down to collect these areas, more than likely it's going to continue pushing up even through Sunday. And then we'll kind of figure out what the market is trying to do. If it gaps down, that's kind of good because it should collect this. But, I think that it's going to gap up and then continue from there. And then, whenever it wants to make its way back to these levels, if we do see that, back to these certain levels to, retest, then we'll find another buying position. But I don't know if we'll get that, because this momentum is pretty strong from this bounce. Like this move right here, I didn't mean to do that. I meant to do this move right here. This move is pretty strong, and it should be represented through the Hakanashi. Yeah. So I expect that move to continue. How strong it opened up at what? 1 o'clock p.m. and continue. So I expect this actually continue throughout the weekend, and then we'll see. We may have a gap all the way up here, possibly. But those are just things to pay attention to. But yes, I do think that we're back bullish on US 30. I don't think I've been saying the same noise as the experts, that I don't think that we're in a seller's market. Because again, this just looks like manipulation in order to get people to start selling off. But there's a lot of gaps within this market that the market needs to cover, more so to the upside, that it hasn't retested. I mean, you see this is imbalance right here. We have a gap right here. Let me make that a little bit lighter. Yeah, we have a gap right here. We have support. So if it blows through the support, if it doesn't retest the support, then yeah, it's going to the upside. But that's what I was thinking the entire time. If we didn't blow past this support structure or touch it, more than likely it wanted to retest the previous high within these zones, right? And we're at that previous high level. So even if you just drew a fib from the bottom of this candle, like where the consolidation is at, let's say this is the high of the consolidation. Yeah, so y'all not confused. So we look at the low again, 618. Like the market across the board is showing us 618. Rejection of 618. Closed above 50%, which is good. Definitely closed above 786. So closure above this makes me confident that yes, this market is going to continue to be bullish, and it's going to be aggressively bullish. So you see how this pattern broke out all the way. I think that that's what we're going to hear. I mean, that's what we're going to see. And I think that we're finally, when we get up to these levels, yeah, you might have one slight rejection in order to manipulate, but I think that this market is going to blow past all of this resistance finally. I mean, we're now in territory to potentially go back up to this consolidation. And again, one thing I talked about consolidation, if it doesn't retest like the bottom, like retest that consolidation, and it comes back to revisit it, it's blowing through that consolidation. It's going to blow through all this. It doesn't respect this anymore. It literally gave out too much money in order for the market to actually start reversing, right? Well, in order for the market to continue going down, because remember, you got to think how the banks operate. The banks aren't just about to make somebody rich. So say somebody was in a selling position, man, they would have been eating, besides like holding the position where the swap fee would have been kind of taking money away from them. But if they would have got out at every trend and ignored the consolidation and just stayed with every trend, like, yo, like the banks are not going to do that. So it's time to collect. You know what I'm saying? So it's time to collect. So I see the market actually, after we, establish support, probably breaking out to these levels and then pushing up. I don't know, that might take the entire year for us, but I think this is a good time for people to start buying stocks, buying into stocks. I know we've been seeing the chaos with some of these stocks and stuff, but I think this is a good buying time. Personally, I don't think that anybody should be trying to sell their stocks. I don't think we hit that territory. It looks bright for America. It may not feel like that, but it looks bright for America on the business side and on the investing side. So we'll see. We'll see what the market shows us pretty much tomorrow. Today's Saturday. So the last thing that I wanted to discuss is Bitcoin. I do think that we're at these levels that we discussed, which was the previous support structure. So we annotated this last week. So you see that the market tried to come down, came all the way down to like 78,000. To me, that's close enough. That's close enough to 74K, what we wanted to see. And I know that Bitcoin crypto doesn't do it traditionally, doesn't like create structure traditionally within the market, which is a good sign. So I think that the market did correct it, all this imbalance, man. I think that the market did finally correct itself, and I think we'll have a push up to the upside. And then maybe after it goes up a little bit more, we may come back to play to these levels, but I don't think that we're selling anymore. I know there's going to be manipulation thrown in there in order to make people sell their positions. But in all honesty, the way it's showing, especially with other stable coins and tokens out there, the way that Bitcoin is showing us, and I had already analyzed this and kind of played myself, by trying to catch the pullback instead of just staying with the trend. And I analyzed this since like 2023. Me and my team, we bought down here, but I sold my positions when it started pushing down here. So I even established this. I said if price stays above this level, uptrend will continue. This is an exact replica. I wouldn't say a replica, but I took this from the stock market cheat sheet. If you look at that imagery, crypto is showing the same thing. We broke through this area. So the only thing that we have now is that this entire move may range. So we may have it come back up here, then it wants to come back down here to like 64K, but it's still bullish. You know what I'm saying? So it'll probably give off that imagery like the stock market cheat sheet has. So you guys can Google it. Just Google the stock market cheat sheet, traders, and you'll see that, and then turn it to a line chart, or just make sure you don't have no annotations and see if it looks exactly like that. And I promise you, it looks exactly like that. Bitcoin has probably been the clearest indication of like the representation of the stock market cheat sheet that I've seen. So I think that we did create a swing low, and I think that the market is going to respect that, and we're still bullish. So as you can see that it pushed down yesterday, I think that it was just coming back again. This is imbalance. Let's look at what the scoreboard says. Of this candle wasn't balanced. Again, what do we want to see? 50%. If we have a bullish candle that closes and pushes another bull candle, that's what we want to see. We don't want to see it push down. We want to see it push up. And I think we're done. I think that we are done with this selling pattern. I think this selling pattern is now void, and we're buying up, you know. So yeah, once we get a clear sign on what it's trying to do, I would say the break of 91K, it's kind of like your in a close, it's kind of like your confirmation that it's going up. But I like being in these areas. It broke out of this area, respected this imbalance, broke out of this area again. We're back at this line that I drew. So I do think that we're bullish. I think that we're buying up, and we'll probably buy up to 120K, something like that, before we get some type of like cool down. Just be prepared. Like, it'll probably be violent. So come tomorrow or today, Bitcoin can get extremely bullish, and then you start seeing just one bull candle and it just keeps rising. I think that we might see that with all the corrections that we had, now that NFP is out the way, and all the positive talk surrounding cryptocurrency. So I think that we'll be back on the positive side when it comes to the dollar, as well as like other currency pairs. I don't use the dollar like how it says Bitcoin against US dollar. I don't use the dollar index to try to figure out what Bitcoin is doing. It does not follow that. So crypto is not something you use the dollar index in correlation with like other pairs like GBP USD or USD CAD or Euro USD. You know what I'm saying? I'm more so using it as a guide for like any pairs that's related to the United States, and then regular Forex pairs, not to mention indices. So yeah, that's all I got for today. Yeah, I know it was violent on NFP, but this is also why I emphasize either waiting for the market to finish its move by like the end of, like towards the end of the trading day, which for Friday would be like 12 p.m. You can find a position that'll carry you into the following week. But what I recommend is that during NFP, if you make money, you close out your trade, you close out your session for that day, and you don't jump back in, or you just don't trade NFP at all. And that's going to depend on your level of experience, right? So if you're new, I recommend not even messing with NFP, but I do recommend still looking at what the market is doing so you can kind of get a feel. Don't be scared of the market, you know what I'm saying, because it's doing all those moves so violently. You know, certain pairs, it's not really doing anything when it's certain pairs, but a pair like US30, yeah, you'll see negative and positive 100 in like a minute. You know what I'm saying? So that's all I got for you guys today, traders. So catch me I'll probably do a call Sunday to open up, just to kind of, I should do that because that'll be my market outlook. So I'll probably do that just to see after like the market opens and we have like a couple of hours of data, just to see what the market is actually showing us, and then kind of make our move, our decisions from there. But we should be able to see some clear signs on what the market is trying to do overall next week. And again, I'm more biased on it being bullish, but again, I'm still going to collect the data and wait till the market reveals itself. So again, always hit that like button. Make sure you comment on anything you like, dislike. Always hit that subscribe button. We're getting the views up, but I really need those subscribers. So tell your friends, tell your mom, your uncle, your dad, anybody you're related to. Hey man, Digital Goats is the place that you want to be. So I appreciate everybody that's been returning. And I hope we have a successful trading week this week coming up, and a successful trading month. So I will see everyone Sunday, and everybody have a good weekend. So see you again.